Stop accepting overstated stock statements. That's right. Would you, as a banker or as a monitoring agency or a financial institution which has extended a working capital advance, want to know what are the guidelines that you can follow to ensure that you do not get an overstated stock statement ever again? Hi, my name is Yasha and I am part of the leadership team at SJA, an organization engaged in post-disbursement monitoring of credit for the last 40 years. After completing 300 plus stock audit assignments and specialized monitoring assignments every year, of which 50 plus are for the largest banks and financial institutions of the country, we have compiled a guidance for ensuring that no stock statement that is reviewed by us ever remains overstated. Please remember, overstatement may stem from either overstatement in assets, which is the stock and book debts, or an understatement in liabilities. This video is focused primarily on the former. So what are these guidelines? Number one, establish control on sales. Sales, revenue, and its subsequent collection are the lifeblood of any working capital or cash credit account. You need to establish robust control over the sales level being declared in the stock statement. The most powerful tool for this is bank analysis. If your borrower is collecting commensurate amount from reputed parties, it generates bankable assurance on the sales level. Lenders have conventionally placed excessive importance on indirect taxation returns, but bear in mind that they may not be as foolproof as they seem to be. Number two, fund flow analysis is key. You will appreciate it when I tell you that stock statement carries isolated numbers plugged from the balanced book of accounts. It is of vital importance to draw up a fund flow statement of core working capital components: stock, debtors, creditors, fund-based working capital, and cash generation from the last balance sheet date to the stock statement date. Always remember that working capital is a cycle and core components will always remain in balance in normal course of business activity. Any unexplained movement may be indicators of risk. What do I mean when I say balance? Say for example, the working capital utilization goes up, creditors will go down or inventory will go up. Inventory goes down, debtors will go up. Debtors go down, working capital will go down as the debtor gets collected. So this is the cycle. Number three, consistently monitor trends in holding periods. A company holds 75 days of inventory on an average as per the last 3 years balance sheet. But on the stock statement date, the holding jumps to 150 days. Does this sound familiar? Holding periods are an excellent and objective tool to identify areas of risk and misstatement. You should befriend the trends in inventory holding, receivables holding, creditors holding, and also the unbilled revenue holding periods for the companies which you are monitoring. If you need help or guidance in calculating these holding periods or interpreting these holding periods or even understanding what these holding periods should be for specific industries, please leave a comment in the comment section. We will reach out to you. Number four, visit the plant. The activity level at plant is also a very reliable insight into the health of the working capital cycle. For example, if you visit, say, a factory which makes ready-made garments for export, you go into the cutting section. Out of 4 cutting tables, 3 are lying idle. You go to the stitching section. There are 10 lines of 15 machines each, and like that you have 3 floors. Out of those 450 stitching machines, you see that only 50 are operational, rest are all lying idle. Similarly, you have observations in the washing section with the hydro extractor, with the tumbler. In the finishing section, you go and see there are so many number of inspection tables, but activity level is very low on a few of them. Similarly, in the raw material area, you see that the grey fabric, processed fabric rolls are lying there, and it seems as though there has not been much activity for some time. There are heaps of assorted fabric. All this points to a slackage in the production process and subsequent slackage in the working capital cycle, and maybe incidents of non-moving stocks or non-realizable debtors. Number 5, profiling of major customers and suppliers. Now see, showing sales in GST returns, generating underlying documents, and even getting collections is the easy part. Does the receivable and supplier list contain parties with dues of over 50 crores, whose average annual sales is not even 40 lakhs, who are not engaged in the same line of business, have unknown beneficial owners, have KYC defaulters as directors or shareholders, or have directors living in slum areas, or have boards which keep changing in entirety every 2 or 3 years. There are certain very classic traits of shell corporations which we need to watch out for. This is a vast topic in itself, and if you have interest, let me know. I will create different content on the same. So it is very important to do profiling of your major customers and your suppliers to ensure that the ecosystem in which the company you are examining is operating, it's a healthy ecosystem, it's a compliant ecosystem. It does not contain any shell corporations or paper corporations who are only generating transactions without any underlying movement of goods and services. So besides the above, there are other useful procedures also, like debtors ledger analysis, customer line item analysis in an SAP environment, 6 months inventory movement analysis, analytical review of financial statements, which you can adopt in order to get more assurance about the stock statements. One thing to keep in mind is that whatever procedure you adopt, it should be efficient, it should be crisp, it should be something which you can implement every month. It should not be a clunky procedure. So these are all very efficient procedures which will help you get early warning signals in a situation where there is any kind of overstatement in the stock statement. So if you like this content and want us to make more such videos, please show your appreciation by subscribing to this channel, where we will keep cutting through the clutter. Until next time, this is Yasha saying goodbye and thank you for watching.